Hello, hope you're doing well. Thought I'd make a quick video breaking down USDCAD and how you could have caught USDCAD from the very bottom of this monthly candle, which you can see is now engulfing our prior month's candle. And now obviously for those of you who are viewing this, this is hindsight. I'm talking in hindsight. But for those of you who are in VIP, you know that I was talking about levels down here for weeks, for months in advance. Okay, so you were made privy to this, and it's very powerful stuff, and I thought I would just make a video now kind of breaking it down for everyone to see with some clarity. Okay, so monthly time frame. Okay, as price traded and rallied into an old high, didn't take it out, and we started to retrace and rebalance the market. Okay, you can see that we created some nice lows here, clean equal lows. You can see on the monthly, more easily on the weekly time frame as well, prior to a monthly down close candle that took out liquidity. Okay, so our monthly candle here was really our focal point. Okay, well, we don't necessarily want to just strictly enter off the open of a monthly candle and have a probably 300 pip stop. Okay, we don't want to have a 300 pip stop. Okay, so we want to use our monthly candle here simply as our area of interest. Okay, and then zoom into this monthly candle. Oops, not going to let me zoom into this monthly candle here for precision. Okay, so I am going to hop on down to the daily time frame. Okay, and VIP, obviously I gave you guys a full breakdown on our live sessions regarding this very level at which we reversed. Okay, so looking at the daily, and remember all of this price action here is part of that monthly down close candlestick. All right, many novel smart money traders might have seen this daily candlestick. Okay, you can see there's really no wick to the upside. We opened and sold into liquidity. Okay, so you might have entered here and you might have had 120 pip stops, better than 300. All right, but just understanding some simple things here can really reduce your size of your stop loss and allow for even more precise entry. Okay, so what I pointed out to VIP was, yes, we have our down close candle here. Okay, but what we can see here, even on the daily time frame, are these wicks. Okay, how clean they are, equal lows. Okay, and I'll drop down here. Now I'll actually use bar replay. Okay, I'll drop down here to the 4 hour, and you can see it even more clearly. Okay, double bottom, triple bottom. Okay, price respecting this very level. Okay, so when price took out old lows, okay, accumulated, obviously the expansionary move occurred here where we retraced into this low multiple times and rejected it, leaving all of this liquidity, all of this money in terms of stop loss, sell stops, below these lows. Okay, so remember, we were looking at the open here, the daily, but we noticed the fact that we have these lows, okay, which price will more than likely run out before making another move to the upside. Okay, so we have an understanding that we don't want to necessarily be entering here above our equal lows. Okay, so now we're looking to the left or below our lows to try to find that precise point. Okay, and what you can see here on the hourly time frame, okay, and I talked about this level weeks in advance, but you can see here, this is really where our expansionary move to the upside began, okay, in which the market never really rebalanced. Okay, so what I noted here was an imbalance here on the 1 hour time frame. Okay, price was evenly traded within this range, and then our expansionary move occurs, leaving this imbalance in price. Okay, so what you can do, measure 50% of our imbalance. coming in around 1.2995. Okay, stop loss, if you wanted to be safe, could have been right below this low. Or if you wanted to be a little more aggressive, could simply go below this wick, the full imbalance fill. Okay, so getting out of bar replay, going over to more recent price action. Goodness. And there you have it. Okay, remember this was our 50% imbalance fill. You can see price traded into it to perfection, and we have taken off to the moon ever since. Okay, so I'll just size up the risk to reward quickly and wrap up this video. Okay, this would have been our more conservative stop loss. Would have been around 19 pips. Currently, for the swing, you would be up close to about 425 pips for a nice 1 to 22. And I do believe we can see more upside. I believe we can see 1.35 very soon. Anyway, you can see with the conservative stop loss, the swing could have caught a 1 to 22 and running, or with the more aggressive stop loss, would have been about 5 pips, and I can't even read the risk to reward, 1 to 96.43. Okay, so once price trades into our higher time frame objective, okay, and I outlined this in front of VIP on a live session in advance, weeks in advance, before we even traded into this level. Okay, VIP, you know this. But anyway, once we trade into our higher time frame objective and have that reaction, okay, now we have more conviction behind our intraday trades as well to the upside. And obviously this doesn't have to be your only entry, right? We make that move away, start creating higher highs and higher lows. Obviously this goes break even, and now we can look to add additional entries to this market. Okay, so the reaction off of this level, the higher time frame objective, higher time frame candle in which we zoomed in into the lower time frames, found precision. Seeing this type of reaction, very strong reaction from this level, will give us conviction behind intraday trades for continuation trades to the upside. Okay, there was an opportunity here. You can see ran the lows. There was an opportunity here. There was an opportunity for entry here. Plenty of opportunities to add additional positions and really ride this swing up. All right, so I hope you enjoyed this video. Let me know what you think about it in the comments section. Let us know if you have any questions. And hope you really did take something valuable out of this tutorial.